to Ed. He's 74. I took an RMD in 2022 for $30,000, donated $6,000 to charity, and had the money sent by Fidelity. The 1099 form showed $30,000, so the contributions were shown as itemized deductions. Now, I thought Dan used to say that the deductions should reduce the 1099 amount to $24,000 in this case. I take standard deductions, so in this case, I get no deductions for my donation to charitable institutions. Should Fidelity have made the 1099 for $24,000 instead of $30,000?
No. And the reason why is because the 1099 is going to reflect every single dollar that left the account. You want that to be reported to the government, especially in the case where you're taking required minimum distributions, which because of your age, you are. So you want the government to know that you took out the right amount of money, because let's say you have a required minimum distribution of $10,000 and you only take out $5,000. The tax penalty on the $5,000 that you didn't take out that you were supposed to is 50%. So you owe $2,500 on that distribution that you were supposed to take out and you didn't. So the 1099 is going to reflect the total amount that comes out. The way that you get that money out tax-free is by reporting it correctly. So you should get some kind of documentation. In the case on the platform that I'm on, it comes in the form of a letter, and the letter says you distributed X number of dollars to this particular place, to this address with this tax ID number. You keep those letters, you turn them into your tax person, and you make sure that they record it on the appropriate line. So on some tax forms, that line is for A and B. For A is going to report what's on the 1099, everything that was distributed, and then for B says how much of that was taxable. So if you took out 30 and 6,000 of it was not taxable because it was sent directly to charity, then you only report that 24,000 was taxable. And that's how you do what's called a qualified charitable distribution, which if you're 70 and a half, you give and you have money in an IRA, that is the most efficient way to get money out of your tax return, especially if you do not itemize, because then you can take the larger standard deduction and you get that other money out tax-free as well.